What is going on, everyone? Welcome back to another video. We're going to try to make this one rather quick. We're going to be reviewing our ES futures contract. We're just going to be breaking down what happened today. Not a whole lot happened. Kind of uneventful for the most part as far as my trading went. Definitely ended up on the wrong side of one trade. And then I will discuss that here in just a second. But we're just going to go over the technicals here. Just basically what happened today. Mark our destinations. And then look at our daily chart and our weekly chart, and then get you guys out of here. So if you guys would not mind, please leave a like and comment something down below. Maybe let me know what you traded. How do you trade? How did you trade this choppy mess of a day? I definitely missed some trades out here. Definitely missed some trades. But let's get into it. So we opened today above the previous day's high and inside of the set of single prints from the double distribution day down that we had back on Thursday of last week, right? So this is all Thursday's range. So this whole section here is Thursday's range. This is Friday. This is Monday. And today we opened up inside of that set of single prints, filling the first set and then getting into that second set of single prints. And pretty much all day long packing volume where the sets of single prints are. And that happens a lot of times whenever you have a large move down or a large move up and have some rather large sets of single prints. You typically find time and build in volume and spend some time in that range. Usually whenever you have large sets of single prints like that. And you can see here from that day on Thursday where there was basically no volume, just a big gap between the upper distribution and the lower distribution. There's no volume being done right there, right? Well, today we packed in all that volume and then some. So we opened up with the gap, pushed up, came down, filled the gap, right? Held above the held above the lower distribution, right? Held above the lower distribution from that day, and stayed above basically value area from Friday, stayed above value area and stayed out of Friday's range for the most part, only to just sit here, chop in between previous high day and kind of do nothing before, getting absolutely pushed up here late in the evening to only rel it back down, get balled up again, and squeeze it back up to make a new high on the day. So kind of uneventful. Where I got in trouble is I got short here late in the day, right before the Three Stooges happened, Curly, Larry, and Moe, KL and M, the last three time frames of the day. I got short in J period against the upper end of the lower distribution, thinking, all right, we couldn't fill the set of single prints here. We couldn't dip our toe into the upper distribution. Maybe all we wanted to do was pack in a little volume and then rotate back down and test the overnight low. Now we had gotten the overnight high early on in the day. Overnight low was around 1450. So 1450 was the overnight low. And I was kind of looking, I was like, all right, I'll short here around 26, have my stop above 30 or 31, basically above where the upper end of the lower distribution was. It also was trying to find acceptance back inside of the previous day's range, because I was thinking, all right, we couldn't do anything when we pushed up. Maybe we'll get some movement to the downside, test the overnight low or get near it, and I'll get out of the trade for a good, profit. But instead, I should have been fading the edge or the extreme. I should have been buying down here, looking to rotate back up towards the high, because that was the proper play, the more correct play, the better risk reward trade than what I had as a short. I had a little bit of an innovative play where I was thinking, all right, because we couldn't get up here, fill the set of single prints and get in the upper distribution, maybe we'll find acceptance back into that lower distribution and back into the previous day's range and kind of go test the overnight low. And I was wrong. I got stopped out of that short and lost some money. So after that, didn't do anything again until we pushed up right around VWAP, right? We were right around VWAP. We had pushed up and I decided to short again once more around the 33 level and got stopped out again for another like 2-point loss. So all in all today, pretty salty about the losses, kind of paper cuts more or less, nothing major, especially whenever we're trading with the MES, nothing major happened. But we end up today with today's high, today's low, and a 9Y point of control right here at K's high. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9 time frames out of the 13 time frames we had in the day, traded back and forth between 44, 34. So basically doing what I said earlier, just packing in volume in between the sets of single prints. So let's go ahead and mark today's destinations. So we filled the first set. We didn't quite fill the second set. We pushed up late in the day, almost filled it. The high today is 49.50. That set fills at 44.51. So 49.50 to 51 is where that next set start and fill at. So let's go ahead and mark today's high as 49.50. High of day. Oop. High of day. And where the single prints start. Then we have our low of day right here at 23.50. Now that I'm marking the high of day and the low of day, this is what I mean by rotational. And this is what I mean I should have been fading the edges versus trying to take that short. So I could have been shorting initially early on in the day against the set of single prints on any push up, right? I could have shorted an A period at 47. I could have shorted in B period at 46. I could have shorted at 47 again in C period. And had my stop above 51. So, right, I'm only risking about 4 to 5 points to the upside to come down and fill the gap early on in the morning, right? Gap filled at 29. So from 47 to 29, you're looking at around, 17 points to the downside, and I'm risking 5 points to the upside. Really good risk reward. Now, once we came down here and got some two-sided trading, meaning we started to create a point of control and, not getting anywhere, basically creating some type of chop. Could have taken a short against the day's low at 24.50, right? Not today's low, earlier. Day's low is 23.25. I need to fix that. I thought it was 23.50. But I could have taken a short, right, against the 23 level. Could have been taking short or taking longs, excuse me. Could have been buying around the 23 level, 24 level to rotate back up towards the other end of the range, right? Whenever you're in rotation, that's usually what happens. You push down, find buyers, push up, find sellers, push down, find buyers, push up, find sellers. So when I was selling here around 29, I definitely should have been buying here. I should have been buying here. So I mean, this was like your typical novice trader setup, right? You got your support and you got your resistance, right? That's basically how that looked at and played out. You had your resistance up here, you had your support here, sellers were up here, buyers were down here. And that's kind of how that played out. Definitely could have been taking longs anywhere in the 25 to 23 range, and then using your stop below 23, risking a couple points to the downside to rotate back up towards value high, which at the time was 42, right? So, I mean, you're gaining, anywhere from 10 to 15 points on a rotation if you're patient with it. And if you're scalping, you definitely could have gotten, a couple points, anywhere from 2 to 5 points on the push back up or the push down, especially on this little bit of liquidation here where we kind of went whoop and definitely could have faded the extreme there, but, just wasn't feeling it. So we do go out with today's high, today's low, and that was just kind of the trade expectation for the day and kind of how you could have traded the day. And I guarantee you there are a bunch of people that were buying up here at the highs, thinking they were going to go make new highs. And then you had people like me that were selling down at the lows, thinking we were going to make new lows on the day. And I got proven wrong. So next time I'm just going to take what trade is right, which is to buy. All right, 34.25 is our 9Y point of control. And here in just a second, we're going to review our daily and our weekly time frame. Nine Y point of control. So there is our magnet for the evening. So if tomorrow we open above 44.34, like we closed above it, we should go and take out today's high at 49.50, and then dip our toe into the upper distribution, which starts at 51, and then the upper portion is 68.75. If we do not open above 34.25, you'll look to rotate and take out today's low at 23.25. If we can't do that, just expect to play around that 44.30 level for a bit more time. Maybe we need a little bit more time in this range in between the distributions from that day, right? So this is what that range would look like, essentially. Maybe we need to pack more volume in between the 50 level and the 25 level. So in a 25-point range, I would not be surprised to, if we continued to chop around as this market is in balance and waiting for more market generated information. But if we do get those upside destinations, 68.75, then 78 afternoon rally high, then 91 high of day from that day, and then 10Y point of control up at 97, downside 23.25. And then you have absolutely nothing but a vacuum and a void down to 65.25. And then let's just look at what this balance looks like on a 30-minute time frame. So our balance high is 68.75. That is our balance high, right? Remember last week how we were talking about that being our balance high and how we just stretched it. So scenario whenever you come into, or whenever a market is in balance, is you get near the top of the balance and back off. You get through the top of the balance like we did here on Thursday, stretch it just a little bit and back off, or you go through and away from it, right? You go through and away from that balance area, you break out of it. Same thing for the downside. If we come back down near the balance low, balance rules will be in effect, right? And one of those rules being the same for the upside. You get near the balance low like we did on Friday, got near that balance low, and you bounce. You get near the balance low, stretch it just a hair. So that would mean taking out 43.50, taking it out by just a hair, and then coming back inside the range. So stretching it or pushing through, or to and through and away from it. So keep that in mind. Market is in balance, meaning we're just chopping around in this range until we break out or until the market tells us otherwise. So let's go ahead and look at our larger time frames real quick. We'll go over the weekly and our daily because things have kind of changed a little bit. So we've had a little bit of a back test of that 43.27 level, which was our previous extreme monthly balance high. But so far, our weekly has been one time framing down since we took out that balance low at 93.75. We've been one time framing down 3 weeks in a row now. Okay, 1, 2, 3 weeks in a row, meaning we're taking out previous week's low, setting lower highs, and continuing to trend down lower. Now, since last week was an inside week, we'll be looking to see if we come out of this to the upside, inside week up, or an inside week down. Both scenarios are still on the table as we've only just begun this week. But because we had an inside week last week, you could say the market has gone from down to balance, and you could potentially say that this market is in a balance area from a balance high of 45.0775 to the balance low of 43.50. So could potentially continue to chop. Only thing that would firmly put this market into balance is if we took out last week's high at 68.75, which is our daily balance high, right? Keep that in mind. So that is our daily balance high. So if we took out that 68.25, that would be putting the weekly back into balance. And then not only would we be putting the weekly back into balance, but we would be one time framing up on our daily time frame. Now look at this scenario that is happening. Scenario that I described and depicted and kind of played out last week or the week before in one of my videos, how this market, was coming down. You had the 20-day moving average pushing down. And at some point I expected us to come into some type of balance and have the 20 or the 50-day moving average be right where our balance high is. And that's exactly what's happening. It's basically our balance high is the 20-day moving average. So we either push up to it, test the 20-day moving average, and reject it. Same rule would apply for balance high. We get above that, put the weekly back into balance, get above our 50, and put the daily up. That would put the daily up. We need it, and it would be a good strong close above the 20 and the 50-day moving average. So look for that in the coming days. Do we get above the 20? Do we get above the 50-day moving average? And put this daily back to one time framing up. Put some balance on the weekly and start the move to the upside again. Resume what we've been doing all year long, which is grinding higher. Volume today very low, not the highest of volumes, definitely below average. So keep that in mind as well. With all that being said, ladies and gentlemen, we'll catch you guys in the next one. Thanks for stopping by. See you.